The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 11 March 2022. For those that don't remember, this is the 11th year anniversary of the Fukushima disaster. Moving on, I'm just going to talk a bit off the top here on silver and probably something else. As you can see, silver on this 30-day chart from Kitco, it's been pretty much in an uptrend. I want to close that out and get a better look. I want to look at this one-year chart. And people have been asking me, how high is it going to go? And the answer is no one knows for sure. Are we going to go higher? And I think we have a good chance of going higher due to the current situation in the war front. And because of that, where would it exhaust? And the answer is most likely where it's hit the most resistance recently. So on a one-year chart, that's around the $28 level, which is roughly $2 US from where we are right now. It will ebb and flow. We're off today. I think the talks of some peace or a resolution, I probably should say, are in the works, but I doubt it'll happen. I think this thing is going to have a longer duration. That's my thoughts. Regardless, I think there's more pressure to the upside on both gold and silver. And again, I think 28 might be some profit taking. Not that that's my ultimate target. It is not, but I'm a practical guy. And with all this going on and seeing silver go up like 93 cents on the open a couple of days ago, I remember that. So a lot of interest in the silver market currently, and I think that will continue. I remember the early days, way back when it was like Ted Butler and myself were about the only ones that were basically on the internet talking about silver. Not exclusively. Well, Ted's pretty exclusive silver only. I've done, obviously, a lot of things in the resource sector. But regardless, Wall Street Silver's been around a while now, and they do some great interviews, so I'm just bringing that to everyone's attention. I think anyone that follows my channel is well aware of it, but they do have a YouTube channel. Just in the last week, the last 3 days, all these are worth listening to. Dan Oliver, Peter Croft, and E.B. Tucker. In fact, I got to meet E.B. personally. He stopped by the house here not that long ago on his way to Sandpoint. I want to talk a little bit about palladium. Palladium has been on fire. It's been leading all of the precious metals. Pretty much hit a ceiling around the 2,400 level USD until recent events. And at that time, it blasted from 2,400 over 3,000, as you can see from this chart. It's only in the last couple of months. It's only been the last few weeks where we've seen this massive move up. A couple things to mention here. Number one, palladium, in my studied view, is the only asset that's in the precious metals complex that trades basically on a free market basis. And the reason for that is twofold. One, it's an extremely thin or small market. There's not a lot of paper games that take place. Yes, they do exist, but it doesn't really have a meaningful impact on the spot price or the cash price. Secondly, it's an imperative for catalytic converters. And thirdly, it's produced primarily in Russia. There's the old Stillwater mine still exists. I forget the new name, sorry. In Montana, quite an operation. And the other thing I want to point out that hasn't been voiced that often about palladium, but it's often voiced about silver, and that is the natural ratio. The natural ratio of silver has gone from like 12 to 1 in the ground in the 13th century to about 8 to 1 in modern times. So that means every 8 ounces of silver produced is equal to 1 ounce of gold coming out of the ground on a global basis. Palladium is 15 times rarer than gold. So a lot of people think that the gold-silver ratio should trade at the natural ratio, 8 to 1. I won't argue it shouldn't. It used to. In fact, it did for thousands of years when both gold and silver were money and money only. It wasn't modern technology. It wasn't electronics. Electricity wasn't around. When gold was money and silver was money, the exchange ratio is pretty much set by the natural ratio, how much of each comes out of the ground. It's not been the case for a long time for silver, and we all know that. Is that the correct ratio? And the answer is, I don't know. The market knows. It could be. What I want to mention, though, is that palladium, as I said, is 15 times rarer than gold. So with that logic, you would say, well, palladium should trade at 15 times the price of gold. It's 15 times rarer. And obviously it is not. Obviously it's trading above gold. But so these ratios are there to think about. Do they guarantee anything? I think they are useful. I think that you can determine when something's overvalued or undervalued, and they're very good for swap trades if you want. In other words, swapping gold into silver or silver into gold when the ratios move substantially one direction or the other. But as far as setting what the price should be based on the ratios, I'm not sure that has that much merit. I've been getting a fair amount of questions about the platinum and palladium market, the PGM. So just to further that slightly, CPM Group did a webinar on the future of PGMs. I don't know if it's booked where you can watch it after the event. The event was, as it says here, the end of January, but it may be on this. I just want to point it out. And whether keeping personalities out of it and just looking at the raw data, the research, the thoughts behind it, it's always good to get more than one opinion. Look at research across the board and formulate your own mind on what's going on. So that might be something if you're interested. There isn't a lot of information out on platinum palladium, so this is one of the few places you could get a bit of a deep dive. I want to take a look today at something I don't think I've shown here for quite some time, and that is oilprice.com. I'm a paid member of their site. I do look at energy quite a bit, actually, and I do write about it in the Morgan Report. So you can look at the prices today up here, but what I want to bring to everyone's attention is two things. We're in the everything bubble as far as the financial assets are concerned, meaning the bond market and the stock market, generally speaking. And we're getting into a commodity crunch. You'll hear that from almost everywhere, from Goldman Sachs to JP Morgan to people that specialize in commodities. And this article up here today from oilprice.com, 50 minerals critical to U.S. security. And what I want to point out is how important the mineral sector is. As I've said so many times, if you can't grow it, you have to mine it. And this article from Zero Hedge, I won't read it to you, but it's one for this weekend to definitely pay attention to and realize that the bifurcation in the asset classes is taking place. So things that you need, like minerals, gasoline, oil, food, shelter, are all going up in price. And shelters have gotten quotation marks because the real estate market will vary depending on what the credit bubble does. But everything else, it's a hard asset. You pretty much will see it increasing in price to produce due to the oil situation and cost push labor prices. I'm not getting enough money, boss. I can't feed my family. I got to get an increase in pay, that type of things. And then you're going to see some of these real high flyers that really aren't much more than exchange of idea websites will probably diminish in value. And then, of course, on the backdrop, which I want to say carefully, I don't need this video taken down, but what's going on in the pharmaceutical industry with new revelations coming left, right, and center, where a lot of people are waking up to the fact that maybe these things weren't really all they were purported to be. So I'm going to leave it there this week. It is David Morgan of themorganreport.com, and I'll be back with you next week with another weekly perspective.